and welcome to Trading Hour on CNBC-TV18. I'm Ekta Batra. With me is Prashant Nair. Well, it is a day where we are charging ahead for the market, so there is absolutely no stopping the Nifty at this point in time. So 11,677. Yes, we're off the day's high, but nonetheless, the entire trend from Friday, second half, has been on the upside. Midcap index is outperforming today, so that really stands out with a gain of around 3.3% at this point in time. And it's really a lot about the financials. So, for example, stocks at 52-week highs at this point in time are the Bajaj Twins, HDFC Bank, ICICI Bank, Kotak, DCB, Federal Bank, giving you a sense in terms of the kind of rally and the interest that we're seeing in this space. Other stocks in focus: Adani Stocks, Adani Enterprises, Adani Power, Dr. Reddy's, Jubilant Life, Thyrocare, all of them reacting to numbers, and something like a Graphite India, which is higher by around 13% Hi, Prashant.
Ekta, hi, good morning. So it's a stellar day, 270 points so far. Just 2 points, Ekta. One, of course, is the fact that will these numbers, not the numbers on the market, but will the exit poll numbers really hold on the 23rd? That is point number one. So, I mean, we'll just have to wait.
The market wouldn't have given this kind of verdict if it didn't think it would.
You know, the market it's a pricing mechanism, but sometimes it prices incorrectly. I don't know. It's possible that the numbers are even better. I mean, I think we'll have Yogendra Yadav speak to us in about half an hour's time. I was listening to him yesterday evening, and he was saying that, you know, usually exit polls are, they predict the direction correctly. And when the numbers are pretty wild, they actually suppress the numbers a little bit. They lower the numbers a little bit. So the actual outcome could be even better. So anything is possible. So, but that is point number one. The second point, I think, and more importantly, is let's just assume that these are the numbers which we will have on Thursday, the 23rd. The thing to kind of sort of focus on is what will happen to a couple of these sort of, stressed situations. Because of this kind of verdict, continuity, market suddenly looking a bit better, will a lot of deals get done? When I say deals, I don't mean deals which require government support, but deals which essentially are between private parties. I'm talking about situations like DHFL. I'm talking about the SL Group situation with Z. I'm talking about Yes Bank, which needs to raise capital and quickly. So, will the environment for these kind of transactions become easier? It is possible that may happen, and that could actually alleviate a lot of stress which the entire ecosystem is facing, starting with, of course, NBFCs, mutual funds who have lent to a lot of these NBFCs, and of course banks which have lent to NBFCs in turn and directly as well. So, I mean, I think that is something that one sees immediately happening if these numbers hold true. Hopefully, one sees that happening, and it is possible that that may well be the case. I mean, you're looking at stocks, especially, and you're talking about the financial services sector. I think I would say that, I mean, of course, I mean, that is the segment which starts to price in any outcome, positive or negative, first and fast. But this could also potentially be one big reason why you're seeing this kind of positivity as far as banks are concerned. But all of this, of course, is subject to the numbers that we get on the 23rd. I mean, I believe the numbers should hold. In terms of the direction, it could be 20-30 seats here and there, up or down, one doesn't know, but directionally, it's tough to imagine how all of the polls would be off by a huge number. So that's essentially a quick comment. Yeah. I mean, but those are opinion polls. We did not have, Australia does not have exit polls. Those are opinion polls, right? So, but these are exit polls, which are more reliable as compared to opinion polls any day, anywhere in the world. All right, Sudarshan Sukhani of S2 Analytics is with us for a quick chat on the market. Sudarshan, thanks very much. Morning. A quick comment on the Nifty. Do you think these gains will hold? I'm just talking about the near term, today, tomorrow.
Yeah, good morning. Well, I think we'll probably be flat, which means we could go down 50 or 100 points as we did in the morning and then rally back. This is probably the place where the Nifty is facing resistance for today and tomorrow. Remember, I'm also talking about only 2 days. So 11,700 is probably the flat line, resistance line. We are almost there. And a decline of 100 points intraday or even overnight is possible. Then we'll see what happens. We'll take it up on Wednesday.
Okay, well, in terms of stocks, however, Sudarshan, what would your recommendations be today? And any ideas that would surpass, irrespective of what happens on Thursday? Any ideas that you would propagate in terms of stocks?
Yes, first the stocks for today. One is Siemens, it's a buying idea. In fact, all my stocks are primarily in the larger infrastructure space where some kind of momentum is visible in the market today. So Siemens is a buy, Engineers India is a buy, and L&T is a buy. All three from one space which seems to be promising, not only for the next couple of days, but more. I would think that markets will remain at elevated levels till Thursday morning when results start coming in. If the results are what the exit polls suggest, we could have 100 or 200 point of intraday gains, but the gains have already been priced in, so only some exuberance could be seen on Thursday. If they are not what the exit poll suggests, I hope that's very unlikely, but in that case, of course, the markets can slide down, which means that the upside seems to be limited to 12,000 maybe.
Okay, all right. Let's get in a query now. We have Pavan, who bought around 3,000 shares of Tata Global Beverages a year ago at 315 rupees. He wants your opinion on the future of the stock.
Well, Tata Global has gone through a deep correction. I call it a correction because it is in a long-term bull market. It was in a range of 120 to 170 for many, many years. It broke out of that range, crossed 300, then retreated. This is normal. Sometimes when a stock runs up too fast, it will come back and consolidate. So it's in a long-term bull market. The current consolidation is probably getting over, and we can see higher levels in the next couple of years. Stay with the stock, you will be a big gainer.
Fair enough. We'll leave it there, Sudarshan, and touch base once again in a bit from now. So that's where we are at on the market. Three long calls from Sudarshan are coming through. There was EIL, there was L&T, and then there was one more, but all from that same space. 11,680 is where the Sensex is at this point in time. Okay, the exit polls are out, and Narendra Modi-led Bharatiya Janata Party is projected to repeat the 2014 record and perform exceedingly well in almost all states. The market is cheering the exit poll results, with the Sensex and the Nifty, remember, gaining 2% each. But what are the favored stocks and sectors that brokers are talking about now, given what the exit polls are actually throwing up? Rima is here with what the brokerages have to say. Rima, over to you.
Thanks so much for that. Let me tell you the big themes Jefferies is betting on. So one is defense. They believe indigenization in defense still has more legs to go. $10 billion of projects are yet to be awarded, which means L&T, BEL and Bharat Earth Movers could be the key players to watch. Also, under the NDA regime in the last 5 years, road execution per day picked up from 11 kilometers in 2014 to 30 kilometers in 2019. So that is a trend they expect may continue. Therefore, L&T, NCC and Sadbhav could be the key industry players to watch. The next wave of reform could also be in ports and shipping, because commentary on port modernization and coastal shipping has picked up in the last 2 years. Adani Ports and L&T again could be the key beneficiary. Dedicated freight corridor of DFC execution ramp up has been positive. So Concor and Gateway District Park should be on your radar. They're not very optimistic on railways. They believe Make in India, Smart Cities, Niti Aayog ended up just being announcement. But the top picks that they're betting on, this is Jefferies, L&T, ABB, Voltas, KEI, NTPC, Concor and Gateway, because these stocks have the earnings visibility for the next 12 to 18 months, and they should have some upside even in the event of any uncertainty. CLSA says the valuations and economic reality will cap the upside on the Nifty to levels of 12,000. Their top picks remain ICICI Bank, Axis Bank, HDFC, Godrej Properties, Ramco, Reliance and ITC. And Midcap should be back in flavor, because Midcaps are trading at 14 times PE, which is at a 5-year low. And Bank of America Merrill Lynch likes banks as the asset quality seems to have bottomed out.
Okay, all right, Rima. Thanks very much for that. But let's get more opinion then. Saurabh Mukherjee, founder of Marcellus Investment Managers, joins in with his view. Saurabh, hi. Welcome to the show. Thanks very much for taking the time out. Hi. Well, since Friday afternoon, we've seen the Nifty put on a significant amount of weight. We're almost at 11,700, just about hovering at those levels. How much of the good news is probably factored in, and are you bracing yourself for any significant change on Thursday?
Well, look, I think to the extent that the market was working with the assumption that the NDA would need some coalition partners to form the government. In that regard, obviously, last night's opinion polls are a positive surprise. And if the opinion polls are validated by the results on Thursday, Friday, then I think it's entirely possible that this week in totality we could see as much as a 5% rally in the market. What we are telling our clients though is not to get too carried away by it. We've seen good flows of money over the last 3 months into Marcellus, but we're telling clients to take the long view rather than getting too excited about these results and buying the sorts of stocks you were just mentioning. Our view remains that this is still a very difficult economic situation. The financial sector is in a degree of trouble. The job creation situation isn't particularly pretty. Earnings growth has been weak for 7 years and unlikely to recover particularly quickly. And therefore, sensible, cautious, fundamentally high quality investing, we think is still the order of the day. And once the immediate relief rally dissipates, say 2 weeks out, 3 weeks out, I reckon it'll be back to business as usual, construct where high quality stocks like Nestle, Asian Paints, Kotak Bank, HDFC Bank will continue performing well. And there is very little scope in India for speculative investing in companies with patchy track records, weak balance sheets, or poor corporate governance.
Saurabh, if these numbers hold on the 23rd, right? I mean, actually, the local fund manager view is pretty bearish about the economy, about prospects for the market. And if you do a random sort of sample survey, I'm talking about the local crowd. I mean, it's not positive at all, even post the exit poll results, right? I mean, there is the NBFC issue. Many point out as the biggest thing which needs to be tackled right away. But with a verdict like this, do you think the government will feel compelled to fix the economy, so as to speak, and ease a lot of these pain points, or these will be left to their own devices?
I don't think lack of political might was the stumbling block for the NDA in the past 5 years. And it looks unlikely that lack of political might will be an issue in the next 5 years. I think the real challenge in Indian politics, leaving aside whether it's the state or the centre, leaving aside whether it's BJP or Congress, the real challenge in Indian politics is really a paucity of ideas. Because our politics is largely centred around winning elections, grabbing power, exercising political muscle. The exercise of politicians is meant to solve major policy issues, whether it's the NBFC challenge, the jobs challenge, the social security safety net challenge. You really don't see politicians really exercising their intellect to solve major policy issues, which is why I always believed that elections really are a inconsequential thing in the Indian context. There's very little data looking back over the last 50 years to suggest fundamentally elections make any difference either way. Obviously, you'll get weeks like this where people have a relief rally because they're getting a familiar government, potentially getting a familiar government coming back to power. But even over a 2, 3, 4 weeks basis, I don't think this is particularly meaningful. You carry on doing the sort of coffee can investing, which I've written about in my books, which seems to work in India decade after decade. If you do that, you make healthy returns and you grow your wealth over time. But very little room in India to get carried away and jump into the market with both feet and start buying broken balance sheet names or PSU banks, that sort of thing.
Yeah, no, I get that. I get the broad point, the broad thrust of your point. But corporate profits have fallen every year for the last 5 years now. Profits as a percentage of GDP is at almost a 2-decade low. I'm just asking you whether we will have have policies designed for a boost to the economy, or will it essentially continue as it is? I'm not talking about political will, but just focus and sort of targeted solutions.
I think, Prashant, you can come up with the targeted solutions if you know what they are. I doubt our policymakers really have the foggiest idea what these solutions are. So it's not lack of political muscle that's got in the way in the last 5 years. I don't think it'll be lack of political muscle in the next 5 years. I just think there's a paucity of ideas in our policy-making ecosystem. It's not just the politicians by themselves. I doubt even the rest of the apparatus of think tanks, civil servants itself has any great ideas on how to take the country forward, how to take the financial system forward, the job creation issues forward. So And hence, given that lack of intellectual heft, given the lack of ideas percolating through the policy ecosystem in Delhi, it's difficult to see what miracles will be wrought over the next 12 months, which will lead to a certain spurt in earnings. Yes, the private sector banks are going to show a healthy recovery in earnings because they've dealt with the bulk of the mess courtesy the RBI. The private sector banks have been forced to deal with the bulk of the mess on the NPA front. But leaving private sector banks aside, I think we'll carry on with sluggish EPS growth. The three-step process I reckon we'll follow over the next couple of years is, firstly, savings rates rise as people start saving more, consuming less. As savings rate rise, the banks will find it easier to raise deposits. On the back of lower cost deposits, the banks will become a little bit more adventurous as the year proceeds with their corporate lending. And as the year proceeds, corporate lending gradually recovers. At the moment, corporate lending is really, really weak. As corporate lending gradually recovers towards the end of this year, potentially beginning of next year, we see potentially a new capex cycle coming through. That's the logical step for a free market economy to recover, rather than politicians performing miracles.
Okay. All right, Saurabh, but is it a good time to buy autos after the correction that we've seen? Is consumption going to pick up according to you?
So look, I mean, I think the consumption piece is obviously a multifaceted story. If you saw Titan's recent results, there's nothing to suggest it's slowdown in consumption. You speak to makers of high-end apparel, high-end cars, it's not apparent there's a big slowdown there. Where you are seeing a slowdown is NBFC funded consumption, which is cars, consumer durables and such like. And therefore that type of consumption will be predicated on the NBFC sector recovering. Small ticket consumption, which is FMCG style consumption, it was double digit last year. It's fallen to high single digits. I'm not that worried about it. And to the extent, I'm not an expert, none of us in Marcellus are experts in market timing. Our view has been, you buy high quality franchises, the Asian Paints, the HDFC banks, the Kotak banks, the Pidilites, you buy these on a steady basis rather than trying to time the market. Timing the market is a fool's errand in India, I believe. Buy high quality franchises on a steady basis. You make pretty healthy returns in our country with fairly low levels of volatility in your portfolio. India is a unique market. It gives you a free lunch. The Indian market gives you a free lunch in these powerhouse franchises which sell essential products, biscuits, hair oil, cooking oil, adhesives. They sell essential products and they have a monopoly. You combine these two, you get high quality returns over long periods of time. You don't have to kill yourself timing the market, figuring out market is low or high. Buy great franchises, make money in India, continue enjoying your life and your day job.
Saurabh, the great franchises are also a lot of the pharmaceutical stocks, but they've sorely disappointed in terms of valuations, in terms of the correction that we've seen. But they're multi-million-dollar businesses. Do you think that they're significant enough to be a part of coffee can investing at all?
Barring two companies, none of them make the filters actually. So barring two pharma companies, none of them make the cut in terms of being coffee can filters. So none of the top 5 pharma companies by market cap make the twin filters, which is double-digit revenue growth every single year for the last 10 years and 15% ROC every year for the last 10 years. And hence the frontline pharma franchises are itself kind of thrown out by the lack of ability to meet the coffee can filters. Same is true for the frontline IT stocks barring TCS. So the coffee can filters actually are very simple, very powerful. The frontline pharma companies don't make the cut. You do have a couple of mid-cap pharma companies who do make it. So Abbott Labs does make the cut on the coffee can metrics, and so does Divi's Lab. But Dr. LD, Sun Pharma, Cipla, Lupin, Aurobindo, etc. don't make the cut on coffee can franchises.
Saurabh, do you believe with the market looking better? I mean, of course, the base case is the exit poll results hold. Some of these deals in the market will get done. I mean, Yes Bank raising money, DHFL, assets getting sold. There is a Z deal. I mean, these are all pain points, right? Does it get easier?
Yeah. So look, I think for two and a half years ago, I think March of 17, April of 17, summer of 17, I'd consistently come on TV channels and said that you're seeing very low quality paper being purchased by being very low quality paper being placed successfully in the market by corporates with stressed balance sheets, and obviously as is now evident, and I had said it at the time, the mutual funds were buying a lot of this low quality paper. The chickens are coming home to roost there. I think ILFS was obviously the trigger for for the chickens coming home to roost. I think we're only halfway through that process. I think elections, whichever way the election results go, I think it's quite inconsequential. I think the next 6 months, basically from now till the end of the year, I think that cleansing of the wholesale money market ecosystem will take place. Cost of money, I think, therefore rises regardless of what the RBI does to rates, and I think there's good chance that the RBI will cut by 50 bips in the next 3-4 months. Regardless of what the RBI does to rates, I think cost of money in the money market does rise further. Given that the PSU banks have their own tier 1 issues, the rise of cost of money for NBFCs and the demise of PSU banks, it basically forces the entire banking ecosystem in the hands of 4 large private sector banks who've got strong balance sheets, good CASA. And the sort of construct that we see in paints, where 2 players account for 80% of the market share, or the sort of construct we see in automobiles or in two-wheelers, right? That sort of quasi-monopolistic construct, I think, will come together in Indian banking over the next 3, 4, 5 years. 4 banks, I think, stand a really, really good chance of hoovering up the big chunk of our lending in our country.
Fair enough. 30-second answer, Saurabh. You said cleansing will continue for the rest of the year. Did you mean we will see fresh issues, or existing issues will get sorted out?
I think, as is evident and as is appropriate, a lot of these NBFCs and wholesale funded banks are trying to raise fresh equity. I, for one, am a little skeptical as to how successful they will be. I think their balance sheet was, in terms of both asset liability mismatch, i.e. they're borrowing short term in the wholesale market, lending money long term, that issue, and the quality of the paper that they've placed, their NPA issues, I think both are quite meaningful. And I'm not seeing anything in the corporate results that are coming out or in the noises that are emanating from the RBI which suggests that I, as a potential investor in these papers, will be comfortable buying these papers. Marcellus, we are very conservative investors, and our risk appetite certainly won't be enough for these papers to be placed. They'll have to find far more adventurous investors, either in India or abroad, for them to be able to restore the strength of their balance sheets.
All right, Saurabh, we're going to leave it on that note. Thanks very much for joining in. It's been a pleasure. Thanks very much. I'm sure we'll speak to you down the week once we have the final election tally as well. But for the markets, it's up around 2.5%, so holding steady. I just want to point out Dr. Reddy's, which is at the low point of the day. So it's now down almost 7% for Dr. Reddy's post its numbers. So definitely a disappointing reaction coming in after the conference call.